Hey guys, welcome to another Ultimate Edge webinar series. We are back with Del Fujinaka from Honolulu, Hawaii. Hi, Del. How are you doing?
Doing well. Thanks for
Good to
having me.
see you again.
Yeah. Same
So Del
here.
has a company called Hoku Legacy Solutions. We had another session with Del when he talked about the velocity of money in that one. He's going to focus this time on velocifying your real estate investments. So I'm very much looking forward to this because we're all about real estate on our channel, as you know. A little bit more about Del. He's the host of what's called Safe Money Radio, a great radio station that he comes out of Honolulu. And Del, you might be able to elaborate a little bit on that, where people might be able to catch it on the mainland. Del has an ebook called Safe Money on the website as well. If you go to his website, delfujinaka.com, you're going to see lots of educational videos. There's you can book a cash flow meeting with him. There's lots of information there. I highly recommend going to Del's website and checking it out. So Del, before we get started your presentation, you've told me before where the name Hoku Legacy Solutions came from. Can you enlighten the audience on that and get started there, please?
Yeah, well, actually, it started with, I joined shared office space with a guy, former president of a large bank in Hawaii. And then we ended up coming together with the name. And then legacy, I ended up veering off within that office because legacy has always been my mantra, multi-generational planning.
Right.
And so Hoku means star in Hawaiian. And in fact, when you go to my website, there's a nonprofit I have called Hoku Pa'a. And what that's all about is really true north and a stable star, that if we relate that to finances, if we have the unbiased truth in it all, that's what it's all about, and what I'm all about in my why. So Hoku, legacy, multi-generations, and obviously, hopefully today you can see some unique solutions to whatever you're investing in.
That sounds great. All right, Del. Well, we'll turn it over to you. Go ahead and share your screen and begin with our presentation. Take it away, Del.
Awesome. So let's get going here. Everybody see my screen?
Yep, we sure can, Del.
Yeah. Okay, good. So yeah, so just picking up from last time we talked about, on my website, if you want to access it, you can just go ahead and email or ping or see John on it. We can get you the password to get in. But you see, this topic is on velocity financing. And the title of today is Velocifying Your Real Estate Investments. If you're a accredited investor under Reg D, you have to have at least $1 million in investable or having cash flow of 300,000 jointly. You get actually what I call closer to the money and with different opportunities. So a little background on myself, for decades, I was a financial advisor, and I was really after giving the unbiased truth about any investment tool. And what I come to find out when I sold my business in 2018 and hanging with these guys who were former presidents of banks, one of the largest bond asset management companies, we golf, and the running joke was, my question to them was, do you own any mutual funds? And none of them owned any mutual funds. So that led me to believe that in putting my heart and soul into like 401k planning, retirement planning, that on the website, you'll see, what if everything you've learned was half the truth? And today I get to give you some of the other side of the truth. And the whole focus is applying banking principles of not what you're investing in, it's more how you're investing in it. Does that sound good, John?
That sounds exactly what we're looking for, Del. Thanks.
Okay. So yeah, on here, when you click the velocity financing, what I'm going to dial in on is two tools that the banks have. It's quite interesting because I survey colleagues in Texas, in Arizona, and the question I ask them is, are the banks buildings on a 30-year amortized loan? And time again, they say, no, it's on line of credit. So I'm going to highlight that. And then what's interesting is, from starting off last year or 2 years ago, this bank in Arkansas is like a 20 billion market cap bank. I began to discover how they manage money and how they velocify, what I call velocifying their investments. And believe it or not, this company, this bank, had roughly about 350 million And then I began to discover the largest banks in Hawaii, they have 400 million, 300 million in high cash value life insurance. And that's what you see here when you get into the website. It's called the legacy banking system. And now banks call that BOLI's, bank-owned life insurance. That's only on the executives. Whereas what I'm after is being an advocate for accredited investors and even those who really would want to get out of debt. But when I take a look at the accredited investors, there's so many that are underserved when they just hit about the million. Whereas other accredited investors, they're in the 10 to 20 to 50 million. They're doing a whole different way of investing, whether it be with hard assets or gold or precious metals or artwork. And that's what my whole goal is in these next 15, 20 minutes, is to really not give you a fish, but literally give you a fishing pole when it has to do with your cash flow and your money management. So with this here, if you get to click this, it's going to give you highlights on these two tools that banks use all day long. And let me bring it back to here. Last time I talked, I used these financial tanks. And does this look familiar to you, John?
This is where we left off last time. That's a
We did, huh?
good
Okay.
diagram.
Okay. So, to give you more context, it doesn't matter what somebody is investing in. What I love about this is I get to discover habits, financial habits, whether they're a family estate or they're a business owner. And when I get to see their habits, I often share, you show me your financial habits, I have way more clarity about your financial future. But it's way more than different terminologies that a financial advisor would share. And it's not that I'm down on financial advisors, it's more with the knowledge, it's maybe they're doing the best with half the truth. And that's what I attempt to show you here. Now, step one, in order to velocify any type of investment, which we're going to key in on with real estate, you have to have control over your capital. So I want to try to keep it real simple here, because you see, we talked about last time this pipe, where so many of the middle and upper middle class, they're doing the responsible thing and they're planning for retirement. Now, the whole basis of that was because pensions were going out, Social Security was going broke. The government, investment banks, they discovered a way to create that pipe. And now north of $32 trillion is here. Okay. And let me ask you, John, when you look at that tank, that looks kind of siloed, right?
Yes.
And the benefit of it is really biased to was supposedly, as I used to manage 401k plans for business owners, the whole idea was them planning ahead for the future. But when I look at it from the bank's perspective, this money is all locked up. And there's a narrative that says, oh, okay, I can't touch that money until I'm 59 and a half.
Right.
And so it's real interesting, though, that when this is locked up, what another business owner told me, well, Del, it's not really locked up. I can borrow 50,000 from it. And I said, well, you don't want to do dollars. So that's troublesome because number one, we don't know where the tax rates are going to be in the future. But number two is any money he's repaying back, he's going to have to pay taxes again on it. And that's where many people miss that. But it's really designed, if I look at the two entities with this right here, it's designed to profit the investment banks and literally control the revenue and cash flow for the government. When I'm velocifying real estate investments, I'm looking at, okay, what is the retained earnings? What is liquid for a business client or a family estate? And what is the cash flow? So it's pretty simple, right? I look at what liquidity they have and what is the cash flow. Now let me take it back here. And I'm going to lay a foundation, go a little bit deeper into how do we velocify our real estate investments. So, any conversation that whether I'm in a merger and acquisition conversation or I'm in okay, Del, what return can you get me? When I look at one's cash flow and I look at their working capital, That's a starting point. And so here's a couple of key points here. I look at this economic value that's added. It's just a measure of financial performance. And so it's really the attempt to catch the true economic profit of operating decisions. So the calculation, by deducting cost of capital from after-tax operating profit, but just keep it simple. The liquid capital you have, how are you deploying that money to get a return? And that's the business decision that each one, if you look at yourself as an investor, you're the business owner too. And you're managing and understanding debt in a new way, not by paying off credit cards, not by what rate you get in a 30-year mortgage. But it's interesting because that loan rate at 8%, then the cost on the use of the money was 8%. So I want you to capture this here, where it's really about managing our own equity, our retained earnings, and our capital. And there's the hurdle rates, what financial managers are looking at. And these are all terminologies that the banks use. But I want to try and simplify it where you look at your own assets and you say, okay, Dell, I want to invest in real estate. And you look at the leverage. And by the way, that's a key word. Whether you're growing and having higher multiples of a business to sell, how you're leveraging, but not being over leveraged, especially in a day and age like today's economy. But that and the cost at 8%, but the equity at 0, you need that average cost of 4%. Then in this kind of environment, a 6% investment opportunity looks acceptable. Okay. And banks call this arbitrage or spread. Now, placing the cost of existing capital, I look at something else here. If the average return in the stock market at this time was the rate of return even higher. And now when you look at investing in something that gives 6% return, well, now the cost of capital is 10%. So now this environment of 6% return is unacceptable. Okay. If anything, I want you to catch in this, I want you to catch this right now. The lending for real estate or lending as far as commercial lenders, I had an interesting conversation with a former president of a large about the different real estate opportunities and the key in developing passive income. But he posed this question to me. He said, how's the commercial lending on your side going, Del? And what are your contingencies? And I'm glad he mentioned that, because even though my project's is a little under 100 million, his one is like over 200 million. What I love about this is the underserved or the underdogs, because my tranche or what people are investing in, they don't have to come in with $1 million. They can come in with 100,000 and apply the principles of what these private equity funds are doing, what these real estate investors are doing, just to get passive income. And there's 3 types of income that you can develop. And that's real key in the process of why you want to velocify your real estate investments. Number 1 is whatever hours you trade to get the dollars you make, that's earned income. And that's where the government has you really in a stronghold as far as your tax rates. But the other one would be more leveraging time, because you get recurring income and you do the work once, the money keeps coming in month after month, but you get it's very difficult to get to the lower marginal tax rates with that, just based on tax law. The third one is passive income. So whether you're buying distressed businesses or you are investing in quality hard assets like real estate, which is the subject today, it's really not about only growing your asset by buying quality real estate, but really how it's structured by leverage. How are you using commercial banks? But here's the one step further that I want to show you now. And I go back to this model here. Okay, and I'm going to give you a case study. So I identified one client, and the client was all in with my coaching, and multiple real estate properties, had ton of savings in the bank. Roughly right now, pretty decent, but it's way over the FDIC insurance at 1.3 million. Okay, and at that 1.3 million, he knew, and his wife, he had to deploy money. Now because a lot of people, they're looking to pay off their mortgage, and I want to share this, that number one, battling with credit card debt, you want to get past that. But here's the power of understanding how banks create velocity. Real estate, commercial real estate, homes, they do not have 30-year mortgages, and they don't care what the rate is. It's more using other people's money. And not only that, having an effective rate. And if you can write anything down, write this. You're after the effective rate, not the interest rate of what you're buying. Because we go back to the cost of capital, and you have your cost of capital, and you're looking to create more leverage with the opportunities out there. You need to have the right tools. And on the website, I identify the legacy banking system and the all-in-one financing. Well, first tool is the all-in-one financing. What does the all-in-one financing allow you to do? And if you want more info on that, John is an expert on the all-in-one financing. But this all-in-one loan is a unique 30-year first lien that gives one the ability, whether a business or family estate, to bring down this line, the balance, as far as the cost of capital, in an accelerated way. And what I mean by that is, whether this cash flow is coming from your earned income or your passive income, but more so what I'm coaching clients to do is, whether they're commercial lending, they're using other people's money and other people to pay down this mortgage line. That's when you get to see the velocifying of a real estate investment. So here's an example. I have one client, this client looking at a 13% yield. Now on a development project, that's crazy, but it's more getting into the private lending side that the developer and the engineer allowed me to do before the property cash flowed. So let me show you this one right here. The demographics that's going on right now, there's a ton of migration going on from Californians going to Northern Nevada. And this is, people think, well, this is Vegas. No, Vegas is about 8.5 hours away, southwest. This is more, if you go travel 3 hours from San Francisco, Palo Alto, this is something very unique that's unfolding. People are tired about the tax rates and the tax burdens there. Tech companies are relocating, and the beauty of it all is the development going on here. We're catching a really good arbitrage, but I go back again to the cost of capital. Even though we have a great opportunity here, and let me go deeper in it, okay? The dollars and how we finance this. You see this C6 here? The C6 is where it's focused only on this RV resort. And what's amazing is, over the last 5 years, this property, everything in color, as far as land acquisition, was valued at little under 9 million. And in 4 years' time, because of companies like Tesla, Google, Switch moving in this demographic, it exploded the values to right now, the value of this everything in color is roughly about 30 million. And so we're in the driver's seat at the first seat of trust, and looking at this real estate investment, the existing development around. I got to visit a beautiful Arnie Palmer golf course. But here's the beauty of this here. That C6 is an RV resort. So it's not a circus RV park. This resort is where it's going to meet a need. And I'm prepared for the worst. I know that there's going to be downsizing like never before. And when it happens, this real estate will be ready. Why? Because we're in we have the ability to house RVs, smart homes, fifth wheelers. If you just Google search fifth wheelers, it's like a one bedroom, it's like a studio, and it's all going to be on this lot. And my accredited investors who are investing in this, it's cash flow coming because they're landlords of anybody who's, leasing from here. But again, I say it's not just the opportunity, it's how people are investing in it. And I go back to this tank here. Some guys would just want to pay cash and get the return. While wealth creators, what they do is they do leveraging. So I go back to this all-in-one. One client invested the 250,000 and gets a 13% yield. Now that 13% yield now is coming from the project going back in here. And guess what's happening to the mortgage line? John, can you see that?
Yep, it's going down.
It's accelerating like never before and beyond their own earned income. And when the project finishes in the next 14 months, then it's cash flow and passive income that will bring this down. Now, at the same time, the real estate, whether it's their residence or a project where there's equity in, like in Northern Nevada, all of the real estate, this is all your real estate is growing in value. And here's the powerful thing. Your ability to velocify another real estate investment gets greater too. Why? Because the line is coming down here, and now this blue silver is your new savings account. And when you get to review this recording again, you're gonna get to answer that question. What does it cost me as far as the cost of capital? But in order to have that capital, you need liquidity. And that's the power of all-in-one financing, is multiple things happening where it's not just about one's how much they save. It's not just about what they're spending to consume. There's tax write-offs, but the power of it is that this line goes down faster and it gives greater opportunity to invest in the next, where investors call it when there's blood in the streets with real estate, when stuff hit the fan, it's your key in having liquidity versus the traditional way of saying, I'm going to pay extra with my limited cash flow, paying down the principal, and the whole goal is to pay it off. Yeah, I love people paying off their mortgage, but I love it paying off where they have liquidity up to 80% within their residence, let's just say, that's multiplying their real estate investment. Tool number two. Yeah. Any comments, John? Go ahead.
Can I summarize a little bit, I think, where we're at here, Del, and you can tell me if I'm on track with things?
Yeah.
So what Del is talking about with velocifying the real estate you have is borrowing on it in such a manner that the interest expense that you have is very low compared to a 30-year fixed rate, which most people are focused on. So he talks about the effective rate rather than the interest rate. The effective rate is really what you're paying total on your loan over time. So Del's using some unique products here. First of all, he's got it's an interesting project that you could potentially invest in and get a good yield. The arbitrage that he speaks of is by borrowing on current real estate that you have, so you have equity. But he's doing it in such a manner with the all-in-one loan that the cost of borrowing is less expensive because of the way the all-in-one loan works. That's kind of key to this particular thing that's going on. And the all-in-one loan is the first position loan that Dale mentioned, and it's called a sweeper account. So that cash flow that you generate potentially from the investment that you just did with the funds from the all-in-one loan that you borrowed goes right back into the all-in-one loan, and it knocks the balance of it down very quickly, which is what Dale was describing. That's because the way this particular loan works. And we have a video on our YouTube channel, and guys who are in the audience here right now, if you want to see a copy of that video, just send it to me. Dale's got it on his website here, and it describes how the all-in-one loan works. But it's the arbitrage opportunity with some very efficient financing that makes this work really, really well. It frees up the capital. That's what Dell's talking about. So that balance that you owe goes down, but you can still tap it for another opportunity when it comes along and just do the same thing all over again. Does that kind of capture it, Del?
Love it. Thank you for summarizing. That helps me to build on that second tool, but this is definitely called velocifying your real estate.
Yeah, I see exactly what you got going here. Very, very, very fun, very interesting.
So I go back to the two things I'm focused in on is one's cash flow. It's one thing to buy real estate, but my simple question to the past clients is, what is the positive cash flow on it? And if it's not positive cash flowing, then it's a liability on one's balance sheet.
Yes,
Ready for the financial tool number 2?
let's do it.
Okay, so here's the power of what banks love. They love it when you have 1 million with them. They call you the VIP client. Okay. And why? Because they're getting to velocify in real estate investments with your deposits. You see that?
Yeah.
So go ahead, John.
Nope. Keep going, Del.
That's in perpetuity. This is a
Yes,
beautiful, right? This infinity line.
the
And
infinity
that's,
symbol. Yep.
yes, and that is creating velocity with other people's money and other people repaying it. But here's the thing, with the bank's capital, this is the other tool. They not only have the line of credits that's creating velocity or velocifying whatever investment, let alone real estate, but they also have other people's money, and they have their tier 1 capital sitting in a properly structured dividend paying, I want to say dividend paying whole life. And right here is you conceptually seeing what will happen with the bank. They have about 70% out. So now it's not only deposits that they're velocifying their real estate investment, they're using leverage off of cash value. And you see the same picture here. I'm trying to just keep it really simple. But if you're applying this principle, I want to end with this here. I want you to see this picture here. With these financial tools, unlike the money siloed with your 401k, and banks do this all day long, if the debt benefit as well as the cash value, their max funding it, continues to go up regardless of the collateralization of investing in real estate, as well as all their lines of credit continues to get more liquid because of the acceleration of how they manage their cash flow, you got 1 and you got 2 powerful financial tools that will allow you to velocify your real estate investments, let alone anything else that are of expense. But I love real estate because the magic of real estate, you get to take advantage of bonus depreciation. You get to take advantage of tax law that unfortunately the majority of people can't take advantage of. So
Yeah.
that's in a picture that I'm showing here. You know, I can go in way deeper into numbers, but for one to catch that, and then everything's archived here, let alone like how we're proposing stuff to rescue different banks here in Hawaii. But that's just a quick video, so it's not pie in the sky what I'm talking about. But here's the whole velocity of money mindset. So I go back to, again, if I can be a part of your money mindset, if I can show you that there's better tools that leverage in a more stable way, especially in a down economy, then I can show you your financial future. But you got to have the tools in your hands. And this is just really an introductory to get way deeper inside the engine. I got a little technical on the cost of capital, but this is the picture you want to see. Okay. Now, from a legacy standpoint, whether it's your great cause, or you have a 501c3, or you have generational blessings that are anticipated with children and grandchildren, you see these 2 lines here? They'll constantly
Yes.
grow. They'll constantly grow. And the power of it is when it's all said and done with all your investment strategies both of these tanks will be tax-free, inherited to the next generation. Isn't that beautiful?
I love the way you say it. So, guys, Dale's got two tools he's talked about here. So the first one is the all-in-one loan, and that's how you tap real estate in a very efficient manner. I want to emphasize that particular loan, which we love here, and we love doing it for our clients, is for a particular client that it works for really well. It's not for everyone, but for the client that it works for well, really, which means positive cash flow, which is what Dale's been emphasizing throughout the entire discussion here. It can be very efficient, very effective, and really help you with your investment goals and building wealth with real estate. The other tool there is the permanent life insurance. You need somebody really, really good, because that needs to be set up in a very specific and correct manner. Then somebody like Del Fujinaka knows how to do it. So not just everyone can do that life insurance and set it up in such a manner that you're going to get the benefit, the living benefit of the life insurance, which is what it's all about.
I thank you for allowing me to pour my heart onto this short time, but there's so much more to it. But really, I'm after simplifying the complexities of those two things. You got control over your capital, and not, I think about my dad going, gee, I'm worth more dead than I'm alive. You know, if you got the tools that causes you to have liquidity, and a lot of times people's largest asset is real estate.
Quite true.
Right.
Yeah,
And you're focused on increasing your cash flow. It's a pie chart. Like, as a financial advisor before, I would always talk about diversifying into stocks, bonds, ETFs, alternatives. I mean, nothing wrong with that, but it's a whole new way of diversifying a pie now. It's about, are you creating passive income? How big a piece of it is that versus earned income and recurring income? So when your knowledge base of what you're applying with your financial tools are targeting that, then I think you show me your financial habits and your mindset, there's a better promising future, in my opinion.
There you go. The right mindset with the right tools and the right habits can create significant wealth, guys. That's what Dale's describing here. Brittany, are there any questions from the webinar audience right now? Have you checked the chat box for us?
One that's, can the all-in-one loan be done on investment property?
There is, yes, it can. You can. Rules change on these products, and so you want to talk to someone for real time. Currently, as we're doing this recording here, you can have two all-in-one loans total. One of them can be on an investment property. The other one can be on your second home or your residence, whichever you prefer. Now, do you want to share the best way to get in contact with you if they have questions?
Yeah, so you just go to delfujinaka.com. And then you just punch in your name, your email, and then I'll give you the passcode right now. The password is all caps, SAFE, 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 for safe money.
Very good.
And that'll get you in. And then feel free to click these buttons, about me, my why, and schedule a time right here, or you can call. I have assistants and staff that can help. There's my info right there on the bottom.
Webinar schedule for the rest of 2023. Right now we have September 27th. We're going to have a reverse mortgage mini series with Glenn Smart, who will also be coming back again on October 25th with us.
Glenn Smart is the vice president of our reverse mortgage division at Bay Equity, and he's really smart when it comes to reverse mortgages. He's got the appropriate name, I tell you. He's been on our channel maybe 2 or 3 times now, and we've had really good reviews. So if you're interested in reverse mortgages at all, Glenn will be there to answer any questions. He knows them as well as anybody I know. Thanks, Brittany.
Yeah, and then October 11th, we will have Marcia Murphy on with us, and she's going to be sharing about your journey to unstoppable wealth.
If you want a passionate speaker and a very interesting story, Marcia is it. She's come from quite the journey and survived 2008 through real estate, and many of us on the channel have been there, and has come back and has a lot of passion for the business and for people and for helping you build wealth with real estate. So it's kind of a no-miss one if you really want to check out that. Thanks, Brittany.
Yeah, you're welcome.
So Dell, thanks again for your time. You packed a lot of information into a fairly short time period here. We appreciate it very much and good information. Thanks a lot for that.
Well, thanks for summarizing it too. I need somebody like you all the time.
Yeah, we make a good team, don't we? All right, we appreciate it, Dell. Thanks for coming on. Dell Fujinaka, guys, with Hoku Legacy Solutions. Reach out to him with his website. My information will be on the video on YouTube. Give me a call if you have any questions on any loans, including the all-in-one loan, guys. We're here to help you and answer any questions. Appreciate it. Thanks, Dell. Thanks for your time today.
All the best to everyone.
All right, bye-bye. Brittany, are there any questions from the webinar audience right now? Have you checked the chat box for us?
Yeah, right now we have one that's, can the all-in-one loan be done on investment property? I think you guys.
The answer is yes, it can. You can put the all-in-one. The rules change on these products, and so you want to talk to someone for real time. Currently, as we're doing this recording here, you can have 2 all-in-one loans total. One of them can be on an investment property. The other one can be on your second home or your residence, whichever you prefer. Anything else? Dell, for the benefit of the webinar audience, we're going to have your information on the video that we put on YouTube, and people will be able to reach out to you with either email or phone. But for the people on the call right now, do you want to share the best way to get in contact with you if they have questions?
Sure. Yeah. Just go to delfujinaka.com. And then
There
right
you go.
there, you can punch in. By the way, the password to get in is all caps safe. So it's gonna let me show you one more thing here, and then go into that here. Yeah. So you just go to delfujinaka.com, and then you just punch in your name, your email, and then I'll give you the passcode right now. The password is all caps safe, 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 for safe money.
Very good.
That'll get you in. And then feel free to click these buttons, about me, my why, and schedule a time right here, or you can call. I have assistants and staff that can help. There's my info right there on the bottom.
Very good. So Dell, thanks again for your time. You packed a lot of information.